Today I'll be showing you an extremely easy option strategy that you can do on a stock that you think is going to rise a little bit or stay stagnant. So for this example, I'll be showing you guys on Microsoft. So if we come over here to Microsoft, so for this strategy, I will let you guys know that a piece of it is that we are selling options, which can give you the problem of risk of assignment. So I would make sure you learn about that before you get into any of the option strategies that involve selling of anything. And also I would learn about how to exit an option strategy a little bit sooner than you might want to, because let's say that you're in a good position already and you might not have reached your expiration date yet and you want to leave a little bit sooner. So I would definitely leave some time for that and make sure you learn how to do that before you get into an option strategy. So for this example, I will be showing you guys on Microsoft. So if we come over here, we're going to click on Trade Microsoft Options. So the first thing that we're going to do is we're going to sell a put right underneath the share price. And so we're going to come over here. The current share price is $258. So we're just going to sell a put right here at $257.5. So we're going to sell a put right there. And then this is what I was talking about, is we are selling something. So this can give you risk of assignment in certain situations. So I would just learn about that. Yeah, it's pretty quick. You can just learn about that in probably half an hour or so, and you'll be good on there. So the first thing we're going to do is we're going to sell our put $257.5. Next thing we're going to do is we're going to sell our call on the other side of the share price. So that way the call and put that we sold straddles this price right here. And then the last piece is we're going to buy a call one above those two. And so you're going to see something along the lines of this. And so you can see our max loss is huge right here. And I'll show you another strategy that's a lot cheaper. But as long as Microsoft doesn't fall under 250 by July 29th, which is 4 days from now, then we should be making about $700, in the hundreds. If it continues to rise, then we'll be sitting at about $455. But with this one, you can be safe with a nice 705 profit if you get pretty lucky and get it in that spot, although that is pretty unlikely. But as long as Microsoft doesn't drop, then you should be good. So this is only for one that you think is going to stay stagnant or rise a little bit. We'll come over here to Ford, because Ford is a little bit cheaper than Microsoft. And so we're just going to set this up the exact same. Trade Ford options, first piece, sell a put under the share price, sell a call right above it, and then buy a call above those two. And so you can see how much cheaper this one is. You can see it looks a little bit different once it reaches the profit zone over here, or I mean the right side of it. There's no more still in the green. So that's how it looks a little bit different, but you can see how this will set up, and then this will be on a line of credit. But for this example, we will go back and show you. So we're going to go over to option strat to visualize this a little bit better. So I'm just going to reset this up. So we're going to sell a put right under, sell a call right above, and then buy a call there. And you can kind of space it out in different ways, and you can play around with it and see how some of these things would change. Like right there, if we buy the call a little bit higher, you can see just how the profits will change. So yeah, you can see. But then if we fall to the far right side, then that profit right there is a little bit less. So for right now, we'll just leave it. And if you happen to be correct, you'd make about $700 in 4 days, the ideal situation. But just another great option is that you just happen to be somewhere in this green zone. And so we're going to come over here to option strat to visualize this a little bit better. Come over here to build, go to the bottom right where it says other, and we'll click on Jade Lizard. Now all we're going to do is copy down all of these things. The reason we're going for option strat is because all this shows us is the prices on the moment of expiration, on the expiration date, rather the days prior leading up to that. So let's enter in the one we chose. We chose Microsoft. Make sure the right date is chosen. It is. Alright, and then all we're going to do is just copy this onto there. So let's go in order. 257.5 put. Selling is on the bottom, 257.5. We sold a call at 260. Green call, 260. We bought a call at 262.5. So like I said, you can space this out a little bit different and see how it affects things. But here we can see where Microsoft has to be at what time of what day of the week to see our profits. And this way we can see it a little bit better. And so yes, that's why I like to come over to option strat, so you can visualize your things a little bit better, because obviously Robinhood doesn't show you very much at all. So yeah, option strat definitely helps with that. If you have any other questions, be sure to comment them down below. And yeah, and if you enjoy videos like this one, be sure to check out my channel for more. And yeah, thank you for watching.